On the previous day, the premium had left us with a potential move back up to the 21-24.5 range, and on the following day we opened pretty much right at that level. It is important for us to know where the premium was at this time, and as you can see, it was at negative 556. So what have we learned about a change in trend? A change in trend requires what in respect to the premium? Generally speaking, it's a major divergence. So the question is the premium divergent as we hit this level again? Here we were at 556. Where are we now? We're at 590. That's significant. So without having to do anything more, we're immediately in a short. That's enough to change the trend. And so, with a trend change in the making, if the trend is going to continue to move down, we need to continue to see what in regard to the highs and the lows of the premium. We should be getting lower highs and lower lows. What would indicate a shift, a change in the trend, a major divergence at the low. That would indicate a potential change in market direction. And if the market is moving up, what do we continue to see? Higher highs and higher lows on the premium. And if we don't see that, then we see a major shift down in the highs of the premium at a relative new high on the Spoos. That's a change in direction once again. Okay, so the first line that we were concerned with is up here. That happened almost immediately, so we're just going to get rid of this so it doesn't cloud our thinking. We came down fairly quickly to this low, so that's been hit, and we needn't worry about that. But we still have this 2112 from 2 days ago. From 2 days ago. So are we saying that a premium that's 2 days old can have an impact on what's happening today? The answer is clearly yes. Now, once we go back past 2 days, it becomes less reliable because we know that there is a slow but sure degradation of the premium itself over the course of time. A 2-day impact, no problem. 3 days, less likely. More than that, considerably less likely. But it can happen. So we just need to be aware of that. All right. So now we begin reading the premium as we move down. And we come to our first pivot. Premium is at 650. Now, it looks divergent from the standpoint of the previous drops, and it is. But is it a fair level? This is fairly easy for us to tell, because this price right in here was hit right back here. And the premium at that time was negative 638. Now it's at 650. So has the premium moved up, or has it moved down at the same price? It's moved down. So nothing to be concerned with here, and going long is probably not a good idea. Now we come to here, our first high pivot. We're at 555. Is that a fair number? Well, we're lower than we were right here, but we're higher in the premium by a little bit. And the last time we were pretty close to this price was way over here. And we're much higher. We're much higher than it was when it was at 585. So, is this a cause for concern? Yeah, it's a cause for concern. But there was no divergence. There was no real significant divergence here. All right? And we need to see that. We need a big divergence at the bottom if this is going to turn. We don't see that yet. So we're going to note this. We need to be concerned about that level. But we're not going to take any immediate action. And shortly thereafter, we see the price is almost met here, and we're way below on the premium. Market's coming down once again. Now we get to our next pivot. It's another high pivot. Premium is lower. Fine. Now we come to our next low. Where's the premium? It's lower. That's the way it should be if this is still moving down. And now we come to our next high pivot. The premium is up. Should we be concerned about that? Maybe. Maybe. Yes, it is higher than the pivot here. Okay? But as we've noted, sometimes we get a real low read on the premium at the time of a pivot. So we might want to note that, but this isn't really that far off. 75 to 68. It's not really that far off. This could have just as easily been divergent at a higher number. Okay? So I wouldn't worry too much about that. Now, a quick glance backward. I'm just going to change the color so we don't get lost. We were at 571 the last time we were at that price. 571. And now we're at 575. So technically speaking, we're actually a little lower. Oh, pardon me. We are a little lower on this. Okay. The question was right here. I'm sorry, I drew the line in the wrong place. Okay. So we have to look at a high here. I don't know that we are going to find that. Yeah. And going back this far is a little... well, there we have it. Okay. Right in here. That pivot was at 533. And we're at 568. So from that standpoint, you know, we're considerably lower. Going back that far probably isn't a real good idea to go back that far. But you can see, at least relatively speaking, the last time we had a pivot at that high, we were at a much higher level on the premium than we are now. So now we drop again, and we come to this pivot. And what do we see? Again, a lower read on the pivot. Okay, so this thing is still going to come down. Right now, then, we don't really need to be concerned about much of anything until we get down to that price again. Now, as it turns out, that happens right in here. And now we're at a higher level. We're at a higher level. Now, is it significant? Technically, yes, it is. This is significant. 691 to 660? Oh, yeah. Same price? Oh, yeah. That's significant. But we're not down at 2112.50 yet. So this is liable to be tradable, and it might be prudent to do one of three things: trail a buy stop, or at least tighten the stop, or possibly go long. I think we would be maybe a bit premature if we did that, given what we know. The market has already dropped, from way up here at 24 and a half. And we're down here at 215.50. It's almost 10 points. It's a pretty big drop. Now, we are divergent. So what do you want to do? Well, you can play it the way we are supposed to. You've got a major divergence here. So why not go long? And if you do, it doesn't last very long, because you come to this pivot point, and where's the premium? It's way down there. That's a major divergence. Major divergence here and a major divergence there. You got to play it the way it comes. That's short. Okay, let's go forward. So we come down again, and we're higher still. Now, it's not a major shift. It's only slightly higher. However, it really ought to be lower. It should be lower. But we are so close to this 2112 level. And you know that was forecasted. So, given the proximity, despite the divergence, we'd have the tendency to want to think that this is going to get closer and probably take the risk. But technically speaking, you see a divergence here. And prudently, you might want to do what? Take a long trade now. After all, you got a gap over here. See that gap? You know that's coming back. So, if you go long here, and the premium says you should, and this comes down, and you're higher still, all right? And by the way, where would you put your stop before you even go here? Where would you put your stop? Your stop has got to be below this 2112 level, because you know that's in the make. So if you go long prematurely, your stop has got to be below there, because that's such a strong probability. But you do know this is likely going to be coming back up. All right, so you come in here and you do go a little bit lower, but you get a pivot. So what should you do? You should go long more. That's what you should do. Average into your position. Take another long trade. And dump the contracts that you don't want to keep. Now, you're real close, but you've got this gap up here. And you've got this this level here and here, but you're so close here. Premium says you should go long. If you follow your indicators, you don't run the risk of regretting failing to follow the system. So there you have it. You go long, you average in, and what should you see happening? If this is in fact a major shift, we need a 6-point move up to really change the trend. So we've got to get up to 21.19. Okay, and if it goes back up to the 2 lines here, we certainly will have. So we also need to see higher highs and higher lows. So what's happening? All right, so we move up here. That's your first point of reference. You come to the top of this move, and what happens to the premium? It drops again. You're divergent. So what are you going to do? Follow your system. All right, you went long here, but you see, yeah, that doesn't make any sense. We shouldn't be that low. So you short it right here. There you have it. So now the premium has done exactly what you would ask it to please do for you. And that is, tell me how to trade this. And the premium will do so. There's nothing better than the premium, even for reading the trend. So as this is dropping, you should be getting lower lows and lower highs. We've got our first high pivot here. We get another high pivot here. Now this is really about even. No, it's actually just a little bit lower. A little bit lower, but this is a little higher. Now we've got a different story. But this drops very quickly to where the premium said it would. And what happens when we get there? We get a low pivot at 681. 681. That's higher than it was way over here. So there's a slight divergence, but this is way below what it was over here. So what does that tell you? Think about it. Is this a fair read on the premium? Is it really divergent? Well, from the standpoint of the most recent drop, yeah, there's some divergence there. Sure there is. So the next question that you have to ask is, well, is that a reasonable number? Well, where was the premium the last time we actually went down there? Let's go back. Now we're going to have to go back quite a ways. We were down at 743 when we hit that number. Aren't you glad you have that number? And now, oops, now you're at 681. And you actually went lower. So are you divergent? Is that a fair number? Is it divergent? You know, from the last time we were at that price. So yes, you are divergent. Okay. So what should you do? Okay. Now, is it a major divergence though? Okay. Well, 781. Well, pardon me. Let me go back. $7.43. Pardon me. And 681. Yeah, that's major. So, proper thing to do, go long. Now, you've got a couple of targets in here. You've got this first target because we had a higher read on the premium here. Should have been lower, and it wasn't. So, there's a target. We got 3 targets now. So you go long here. What should happen if this is going to continue to go long? You get a higher high and higher lows. I will repeat that until it becomes part of your DNA. Okay. What happens? We get a higher low, but we get a lower read on the premium. Shouldn't happen. It moves up higher, we get a slightly higher read on the premium at a higher low. Okay? So you're now in a little bit of a quandary. According to the premium, the market is still moving down. This and this, the premium is saying we're still moving down. This and this says we may, in the future, go back up. But right now, we're moving down. Why do I say in the future we may be moving up? Well, because the premium is still moving down, and that and therefore this is not the low. Okay, that's not the low. If this is still moving down, we're going to get lower than that. We've got to get lower than that with a major divergence on the premium to give us a long trade. This is not a huge difference. It's not a huge difference. And the last time the premium was at that level, okay, right here, last time it was here at 1550 was over here. 1575, where was the premiums? 576, where is it now? 577. Okay, it's a little lower. It's really where it needs to be on that basis. So there's nothing forecasting that this is anything but divergence. It's a fair price for the or a fair read for the premium for that price. So you got to go with this. This is coming down. So if you're long, you need to get out. We're not ready yet. See how we did that? Here, we looked at the premium, 577. We've got the historical read on the premium, same price, 576. We're lower here than we were here. It's a no-brainer. But we got to get out of that short. Pardon me, get out of that long and go short. So you do. And now you break through this level once again. So we're going to get rid of this so we don't have to worry about the reference. Now, we're not going to use any kind of market profile to tell us what to do, because the market profile data can be really very useful. very useful when it comes to anticipating just how low this market is liable to go. But we're not going to do that right now. We're just going to read the premium. So we went short again. Now, you obviously don't know this is coming. All you've got to work with is the premium. So, market is going down. We hit a new low. We've got a lower low on the premium. We come down to this point. We have a higher low on the premium. Is it significant? Well, if 7 was a proper read here, and look at how far down we've met, the premium should really be much, much, much lower than it is. Much lower. But it's not. So is this a major divergence? And the answer is yes. Okay. That's a major divergence. You got to go long. So you do. And you go long and you get a pivot, comes down, but it's at a higher read. Okay? Look at where you were before. Here, much lower high, but a higher high on the premium. Hey, this is confirming. When you come down, slightly higher low on the ES, but a much higher read on the pivot. This is going up. And you come up to this point, and you're still higher. Oh, wonderful day. The market is moving up. You can't tell anything more than that. There's nothing here that's telling you to do anything but stay long. So now what do? Now look at the premium level closely. This was your last relevant pivot. So the lows, as the market moves up, should be higher than this level. Blow this up a lot more so you can see this. You're going up, and you come to that little pivot, comes down, and it's coming way below. Way below. You don't see a read on the premium here only because we're not plotting it. We're only plotting this based on a left and a right strength of 60. But the premium is still telling you a great deal because we're dropping considerably below this threshold. Now, just the fact that we dropped here a little bit through that and here a little bit through that is not too much of a concern so long as we move back up at the pivot point. And we're not even tracking those. But just look at what's happening here. There's no pivot here. You're way below. And then on this next low pivot, you're even further. So by reading the premium, you know something's not right here. Something's not right. You need to tighten your stop. And you need to do it real quick like. Because you're real close to your entry over here. And this probably scared you. And this is now really scaring you. You gotta do something so you don't get stopped out. Okay. So you did the right thing, you didn't get stopped out, and you come down, you have another pivot, and guess what? You got a higher low again. So what do? You play the game, and you go long. That's what it's telling you to do. So you go long, tight stop, you come to your first pivot. Okay. Now this is lower than it was over here, but it's supposed to be. It's a lower read on the premium. Then you come over here. So let's just see about this. This is 675, and over here, not sure if that's 675. No, that's lower. 650. Slightly lower pivot there, but a much lower read on the premium. That's major. We never got higher. Much lower read on the premium. This is coming down, so play the game and go short. Now, you come to this pivot, and once again, you're now at a lower level, as you should be. So you made money on this little move up. Over here, not so much, but over here, yeah, you made money on that. And you did the right thing, and you took it because of the divergence. So, at this point in time, it's into the noon hour, and this market is short. We've been hitting new lows all day long. Okay? New lows all day long. But because we're in the noon hour, sometimes we get a yellow day. Between 12 and 12:30, we get a yellow day. The market turns right around and goes right back up. Now, is there any evidence that that's going to happen? Not really. You don't have anything definitive. Nothing definitive other than right in here. Right there, we get a little higher read. And over here, I think we had a little higher read. Yeah. Okay. So let me move this line down. This area of caution. All right. So we're going to continue to move down. We've got to see a major divergence if anything's going to give. All right, so we come into this new low. We've got a lower low again. We're short. Now we move up a bit. We've got a higher read on the premium. Okay, it's higher than this last level here when we were way up here. So there suggests, yeah, we may have a little problem coming up here. This thing is beginning to show evidence of a potential move back up, and that read gives you the heads up for that. However, you cannot go long until we get a new low on the Spoos and a significant divergence. Otherwise, you're not playing this right. Okay. All right. We come into another low. And where are we on the premium? Okay. New low. Another new low. And where are we on the premium? We're only slightly higher. This is as slight as you can get. Okay. We're slightly lower. We're only slightly higher. What did we say? We need a major divergence. So what happens? We come down to this point here, and what do you have? You have a major divergence. Now you go long. And oh, what a world. Okay. Yeah, you've got a real nice basis for taking a long trade. And I forgot to even mention the pivot here. You had one here, you had one here. This is much higher. Oh yeah, this is going back up. And as you can see, that's exactly what happened. So now you go long. But we're late. This is really late in the day. Very late to completely change the trend. Because ordinarily, with the highs in the first few minutes, the lows are going to be in the last few minutes to maintain symmetry. So the premium says you're going back up. And to get from where you are here, down at around 91 it looks like, to way back here, 2104 with 2105 basically. That's a big move. Completely change the trend. And completely wipe out this red day down pattern. But what does the premium tell you to do? It tells you to go long. Pattern doesn't always work out. So you go long and you're happy and you're making money because the premium does not lie. Look at what happens. Okay. So you move up to this point here. There's where your premium is. This is a lower high. So is this. That's just confirming it. This is a lower high. That's lower. That's confirming it. It's a little lower than it ought to be. And this is a lower high. But now it's moving back up a little bit. But this now, now you come to this point here. Basically even with this, and we're much lower. That's pretty significant. And what's happening also from this drop, all right? Okay. Now we've already been given, I should mention, I forgot to do so, with this read on the premium here, and that's our pivot. Okay. That price has to get tested. That's got to get tested before you think about taking a short trade. Okay? And we're not there yet. So as you're moving up here and you come and you see this divergence, all that's telling you is this is coming down. But we got to get above this level before we can really say it's time to go short. Because this is the highest read you've had all day long. You've never had a pivot at this level. At least I don't think so. Let's just take it back. Let's make sure we don't look at the wrong thing. Let's make that blue. Nope. Other than way, way, way at the beginning of the day. It's the only time you had a pivot that was slightly higher. Okay. So that's predictive. Because you're at a much lower price, at a much, much higher price on the premium. So this is going up. You have to go back in time to see that this is actually not divergent at all. So all this is just busy work. And you finally come down here, and as you see, this is a lower read on the premium. And that's not real good. But you can't short this until you get a major divergence on the uptrend, because you've changed the trend here. Oh yeah. This trend has changed. You've easily moved 6 points here. Obviously, it's a considerable amount more than that. And you're still going up, so you've got to get above this level. And when you do, you're only slightly lower on this read. But the last pivot has moved up. In fact, it's moved up from here. Higher, higher. Even though you got major divergence in here, it's really irrelevant because of this. This is your target. You got to get above that, and then you can read whether or not you're divergent. And when you do, you're only slightly lower. 61 versus 67. That's not enough. You get up here, you're even higher. It's still going up, and that's predictive. We're going to go higher. And there is the end of the day. So what are you going to do tomorrow? Premium has now moved up higher and higher and higher. It's given you really the only thing that that's at all been a concern is right here. It's the only concern that you've got. The trend has changed. Oh, yes, the trend has changed. Very late in the day, very unusual pattern. So, you're long into tomorrow. And we need to see 2107 tomorrow morning. So when you get this first pivot here, you're way, way above. And you're going long. But look what happens. Okay. Now let's just show you what it's telling us. That's your goal. And as you get up there, premium says you're moving up. It's going to go higher. That's what it says. Higher highs, higher lows. Everything's cool. Yet, the market drops. Okay? Now, there's no divergence up here. This is a naked bar. But what would probably be the biggest telltale sign is right here. Yeah, you've got a lower read on the, you've got a lower price on the ES, but you've got a much lower price on the premium. This is a big divergence. Yeah, you're not at a new high, but you remember what we said over here. Yeah, you can get a lower high, but you got to reach a certain level first. Okay, you got to get up there before you're really worried about this market going the other way. But that's a big divergence, and it's likely going to bring the market down, and it does. So, market starts to come down. What does it take in order to see a trend change, at least in terms of price? We're up here at 2106. It's got to run down to 2100. And this line is at 2096, almost 2097. We've already seen a change in trend here. So, has the premium failed to give you the right information? No, it hasn't failed. Premium tells you that price is going to get tested. And really, it only makes sense that the previous price over here is also going to get tested. But by way of price, you've had a change in the trend. And all you've got here is a naked bar. So you can anticipate that somewhere down the line you're going to get a divergence on the short that you're already late getting into. And then ride this thing back up. Because there's very definitely a naked bar here. Now, we're going to take the opportunity at this point to pause and shift gears for just a moment to let you know an important piece of information about the premium. First of all, the methodology that we've been discussing is the most accurate method that we know of, but it isn't foolproof. There are times when big spikes up or big spikes down that would ordinarily be viewed as a naked bar will change the trend instantly. That can happen. A big spike up during a rally can cause the market to turn right around and go the other way. Big spike down during a sell-off can cause the market to stop the sell-off and turn right around and go back up. Be aware that that can happen. It's been quite some time since we've seen that. And I'm talking many, many, many months, so many months ago that I can't even remember when that's happened. But it does occur. It does occur. Second point, the read on the premium with TradeStation is very good. But it ain't perfect. We've seen instances, and they're few and far between, when the premium calculation, what is displayed on your screen, is wrong. Now, how can you know that? Well, you've got to know how they calculate it. You read our website, you'll know how it's done. We know exactly how TradeStation calculates the premium, and we're going to go through that right now. Because what you've got to know as this market is coming down is whether or not that's really forecasting a return to this price. Because we've had a trend change, and that's a naked bar. And we've already come down and hit that price over here that we anticipated before. And in fact, it's still moving down. So, how do you know if that's accurate? Well, the first and probably the best way to know is to do a raw calculation. So, you should have up and running at all times a workspace that is running both the ES and the INX on a 5-second bar. Okay? So, when the market hit the top here, you're going to run a raw calculation. This is the high. It's at 2106.50. Now, what bar are you going to read on the INX? Because the premium is the difference. Are you going to read the exact same bar? The answer is no. Listen closely. It is the previous bar that is being read. The previous bar is what is read to calculate the premium, not the same bar, the previous bar. The premium there was 2111.32. Subtract from that the the futures at 2106.50, and what do you get? You get 482. The calculation is correct. Now, you would go to a different vendor if you have that kind of ability and check their data, but most don't have that capability. So we would advise that you do this raw calculation. And if it's right, then you gotta recognize it. You gotta believe it. So, point is, there's two things that can happen. There are caveats to the general rule that we look for when it comes to taking our trades. There's two caveats. Big bars can sometimes stop the trend and leave you with a naked bar that will never get hit. And I shouldn't say never, but if in fact it gets it, it's so far past when it occurred that it's no longer statistically significant. So that's your first caveat. Second caveat is a possibility that the calculation is wrong. So run a raw calculation, verify it that way. If it's right, then you have that to work with. But right now, what's happened is that the trend has changed. The trend is down. So after you've seen the 6-point move down, okay, you get stopped out all the way. You're sad, you're frustrated, and you just say, guess what? It's not going to kill me to keep on trading. But that's exactly what I should do. So I need to look for an opportunity to go long here. Pardon me. I need to go short here. All right. Short on a pivot. Now, this kind of a chart is not a good chart to work with to make those kind of calls. You need a faster, shorter right strength. You don't want to use this, but for the sake of discussion, we're going to. Now I'm going to get rid of this line down here because that, as you can see, has already gotten hit. So as soon as you've had a 6-point move down, which is right in here, you need to look for an opportunity to go short. And you get that first opportunity right in here. And the market moves very, very quickly when it does. So you probably would miss a good portion of that. But you've got this low pivot here. The market begins to move up, and you're happy. It's giving you another opportunity. And you get a pivot here. Take it. Go short. Why not? Oh, wait a minute. You mean we're supposed to read? Yeah, you better read the premium here. You better read the premium, because what you just saw happen is this drop to this drop, and now you've got a lower high, but you've got a much higher high over here. That's really forecasting that that price has got to be tested. You just don't know when that's going to happen. Okay? Now, let's say you do nothing and you get this lower high on both the Spoos and the premium. Okay, take the short. It's very close to that price. It's divergent. You don't know whether that's in fact going to get hit, but that's a very good chance that it will, because this doesn't fit. You go long, you come to this point, you're happy because you got a new low on the premium. And then the market begins to move up a little bit. And now you're a couple of ticks higher, low, huge divergence. Market's going up. There's your huge divergence in here. It's not found here. but it is here. Something's, the trend is down as far as you know, but all you're trying to do is look for an opportunity to go short. And right now, this is telling you this market's moving up. And you got a little bit of a heads up as to where that might, in fact, go. So if you're down here at 2097 and you already know it's heading back up to 2100 or better, why not take a trade long? Okay? And you're glad you did, because it went higher. Okay? It went higher. But as soon as it did, all right, this compared to this is higher. It should be, but this is much lower than this and that, and this is higher than both of those. This is divergent. Time to go short. See what I mean? Short this. And if not there, here. And if not there, here. Okay? Let's go forward. All right. You got to get below this low over here before you can even think about going long. Because the premium said we're going to come back to this price. So you just watch the premium and you wait until you get there, and then you rethink what you're going to do. Overall, nothing much happens. You got a little bit of a kind of aberration in here. But you're short. And then you're really short. And you're screaming short. And you're saying, wow, this market is really going down. Now, we're just going to take you into the end of the day because there's really not much of a choice. This big low, all right, remember how we said, you know, sometimes the you get this great big drop in the premium and the market turns right around and goes the other way. Is that what you've got here? Maybe, but really that's not as big as it might look. It's really not as big as it might look. It's big, but it's not really divergent. Now the only thing that you've got to work with here, on this way down, all right, you got a lower low here. And you got a lower low on the premium. Then you get a higher low here. You get a higher low on the premium. And you get this lower high here. And you get this lower high here. But this is much higher. That's not fitting right. Okay. And then you move a little higher. And you get another higher read. Once again. Now the question is this a fair number? So do you remember how we do that? Okay. When was the last time you were at roughly this price? That was at 97.5. When was the last time that that the highs were right in here? Okay. Last time that happened was right in here. So I'm going to go back, extend this to the left, change the color so that we don't get confused. This is where we are now. This is where we were before. Way below. Way, way below. So this is much higher. Let's go back a little further. Last time we were anywhere near close to this for a high, was right in here. We're still way, way below. Okay, get the idea? So what does that tell you? That tells you that this is divergent and that's predictive. It's divergent in the wrong way, in the sense that it's much higher than it should be. All right? So this is predictive. And this market's going back up. So hopefully you've got enough basis now to begin to learn how to read this trend consistently and know what to do when it occurs. But on that note, we've been at it for an hour. We're going to stop here. Play around with this. Use this workspace. Watch how the trend can be anticipated. Trend reversals can be anticipated by a major divergence and confirmed with the premium as well. And when these things are not happening, you need to watch it. You need to be aware of it, because the premium doesn't lie. Because that big low boom, following day, market tanks. And you knew it well in advance. In spite of a trend change, you knew this was going to happen. And you knew that was going to happen too. There's nothing better than the premium. And you're one of the few traders that is learning how to read it. I'm RSKsys Intl, Spoon Man for Risk.